Welcome back to the Digital Asset Report. Bitcoin is trading near $63,700. Digital assets remain under pressure as geopolitical tension, weaker institutional demand, and stress inside treasury companies keep investors cautious. This comes especially after the Fed held rates steady, noting impressive resilience in the economy. Take a listen.
I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability.
The biggest story this week involves what may be the largest hardware wallet compromise in Bitcoin's history. Estimated losses now exceed $114 million as of Monday morning, with nearly 2,000 Bitcoin stolen from over 5,000 Coldcard wallet addresses. That total is expected to rise because affected hardware wallets are offline by design, meaning many owners may not realize their seeds are compromised until they see the news. The attack traces back to a flaw in older Coldcard firmware that weakened the randomness used to generate the wallet's seed words. While CoinKite, Coldcard's parent company, has released updated firmware, it cannot fix wallets that were created using the affected software. Users must generate a brand new wallet and move their funds because a compromised seed cannot be repaired after the fact. This fallout extends well beyond Coldcard. News of the exploit triggered the largest single-day volume of sub-1 Bitcoin transfers since the FTX collapse as users rushed to move funds. It also reopened the debate over self-custody versus professional custody. Bitcoin gives individuals the ability to control their own assets, but that control comes with risk. This week's events are likely to push more investors to reconsider where that trade-off makes the most sense for them. Meanwhile, BlackRock is expanding its role in tokenized finance. The world's largest asset manager launched 2 blockchain-based money market products on Monday. The first adds an Ethereum-based share class to an existing treasury fund, allowing approved investors to transfer shares between digital wallets. The second is a tokenized money market fund designed for stablecoin reserve management with daily dividend reinvestment and access across multiple blockchains. Both products invest in cash, short-term U.S. treasuries, and treasury-backed repurchase agreements. BlackRock says the strategies are designed to qualify as eligible reserve assets for permanent payment stablecoin issuers under the Genius Act. This move puts one of Wall Street's largest cash managers directly behind the assets that could support regulated digital dollars. BlackRock is moving beyond offering crypto exposure through ETFs. It's building products that institutions can use inside tokenized markets. Strategy is also changing how it manages its Bitcoin treasury. The company sold 1,638 Bitcoin last week for about $105 million, reducing its holdings to 842,138 coins. Strategy also repurchased about $81 million of STRC, its variable rate preferred stock. This marks the second week in a row that the company has used capital to buy back STRC. To Strategy, Bitcoin is becoming part of a broader balance sheet strategy and, in some cases, a funding source for supporting the structure. On the regulatory front, South Africa released its first formal draft rules for cross-border crypto transfers. Transfers from licensed local providers to offshore exchanges or private wallets would need to move through authorized channels and be reported to the Reserve Bank. Domestic transactions made in Rand through local providers would not face the same reporting requirement. South Africa is not banning crypto, but it is bringing digital asset transfers into the same reporting framework used for foreign exchange and capital controls. Speaking of foreign currencies, the US made interesting global macro moves by buying $5 to $10 billion worth of Japanese yen in one of the worst bouts of yen depreciation. President Trump had the following to say about it. Take a listen.
Mr. President, why is the U.S. intervening to support the Japanese yen at this time?
To support who?
To support the Japanese currency.
Because we have a good relationship with Japan. We're very strong, very, very strong financially. And they have a weakening yen. and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
In Washington, the crypto industry has now spent close to $200 million on the 2026 midterm elections. The spending comes as the Senate faces another critical window to advance the Clarity Act. The bill would divide digital asset oversight between the SEC and the CFTC and establish federal rules for trading platforms, token issuers, and market structure. Ethics provisions and concerns from traditional banks remain the main obstacles. And your last story today, BitGo this week launched BitGo Link, connecting institutional clients with accounts at Coinbase, Kraken, Crypto.com, and other trading venues through one interface. The service allows treasury teams to view and move assets across qualified custody and external exchange accounts. This week shows both sides of digital asset adoption. BlackRock and BitGo are building institutional systems, while Coldcard exposes how one failure at the key generation layer can undermine self-custody. Strategies STRC buybacks also show that treasury companies are entering a more complex phase where capital management matters as much as accumulation. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.